Hello, and welcome to the Geopolitics Explained podcast. Before the episodes on the Middle East that I've released over the last few weeks, I set out potential scenarios for the long-term maritime future in the Indo-Pacific. In general, China holds structural advantages and is increasingly seen as a quicker innovator in several key sectors. As for the United States, they are clearly still the world's strongest naval power, and they will remain this way for many decades to come. In a tussle between the two global superpowers, it's worth considering where one could hurt the other. Today, I'll discuss this through the lens of leverage. Something that prompted me to create this episode was a recent episode of the Macro Voices podcast that included Luke Groman as a guest. While on the podcast, he dropped the following quote: "Amateurs think of tactics, while professionals focus on logistics." China's control over global supply chains is all about logistics. Nations around the world that aren't sufficient in vital industries, such as semiconductors, food, and pharmaceuticals, are considering potential strategies to mitigate the effects of this. Unfortunately for many nations, including the United States, the Chinese were considering the logistics of this decades ago. As I discussed a few weeks ago, we saw the Shanghai Cooperation Organization Summit and China's military parade. And we also saw India and Russia being lost to, quote, deepest, darkest China, in the words of Donald Trump. All this combined has then led to the United States demonstrating its intention to pivot to a more Monroe Doctrine style of strategy. This would see them engage heavily in South America, and this has been reinforced through recent events such as the CIA entering Venezuela, Trump restricting aid to Colombia, and through the Argentine swap line leverage. With China playing the long game, as I've discussed before, they won't make any risky moves that they don't have to make because momentum is on their side. On the flip side, the United States is stating that they don't want to be involved in the Indo-Pacific anymore. But with the United States possessing indicators of decline, do they have no choice but to take on China aggressively? Otherwise, China's structural advantages will see them naturally grow into a stronger geopolitical power. One area where tensions remain here and fluctuate quite often between the United States and China is in trade and finance. Now, when we look at economics, finance, and trade, we've seen Trump make many moves, including his self-described Big Beautiful Bill, the Genius Act, and his general tariff strategy to seek negotiation with other nations. These moves have all arisen because Trump sees the global trading system as unfair. This is an effect of the dollar and its persistent overvaluation, with the dollar often being seen as a safe haven during crises. As a result, this makes exports coming out of the United States more expensive. Globalisation has hence seen manufacturing exported outside of the United States to countries where it's cheaper. Trump wants to bring manufacturing back to the United States, and he is pursuing a cheaper dollar to facilitate exports for when this does occur. This is also supported by Trump's Mar-a-Lago Accord, which was coined by former Credit Suisse strategist Zoltan Pozsar. The general premise of this idea supports the United States wanting to pursue a weaker dollar and lower interest rates. With Trump's recent pressure on the Fed, we are seeing an interest rate cutting cycle come to fruition. Trump is doing this because he doesn't want the United States to be reliant on imports. This makes them dependent on other nations, and it naturally increases the trade deficit with other nations. This is why the equation that decided the Liberation Day tariffs for each country was formulated to tackle the trade deficit with each country. In another recent episode of the Macro Voices podcast with Tian Yang, he discussed the US-China relationship. He argues that it is currently going through a shift from profit and efficiency to resilience. During this pivot, inefficiency will naturally arise. It's this inefficiency during the pivot to resilience that both nations are trying to manage, and it will lead to short-term pain. This will see both sides seeking to weaponize the leverage that they possess over the other. This is why China has restricted rare earth exports to the United States. Despite the name, they aren't rare, but very few countries possess refining capacity, and China does. That's why they've played this card today. If China didn't play this card now, they may have lost the option to do so. And we can see that China holds leverage over the United States and Trump here, because Trump has been seeking to de-escalate trade tensions with the Chinese in recent weeks, and Scott Bessent is set to meet with his Chinese counterpart later this week. We also, just earlier today, saw the United States and Australia formulate a trade deal that will largely revolve around rare earths. Speaking of Scott Bessent, he also wants to leverage the assets of the United States. He wants other nations to swap their treasury holdings for low-yielding sanctuary bonds. Alternatively, countries can promise physical investment in the United States, they can pay tariffs, or they can come up with an alternative trade arrangement. But the most important takeaway here is that if a nation doesn't make a deal that suits the United States, then the tariffs arrive in an effort to force nations to get on board with this US plan. This all supports that Trump is pursuing leverage, both domestically and internationally, and he wants to use this to bring power back to the United States through resiliency. But for the United States, this shift to resiliency will come with pain. China pursued this decades ago, but the United States today is attempting to do this while contending with many indicators of decline. One huge indicator of the US empire potentially slowly declining is the slow decline of the US dollar. The US dollar has backed global finance, and the US military has secured reliable access anywhere on the planet for decades. China isn't anywhere near this level yet in both financial and military realms, but still, the United States has a lack of economic and trade leverage to hold over China. If we look back to April 2025, we saw the early stages of Trump's tariff strategies, and we were first alerted to Scott Bessent's thinking behind this entire pursuit. Trump and Bessent expected that they, the United States, had the power in this economic tussle with China, since the United States is a net debtor to China. In other words, this means that China has run a trade surplus with the United States, and they sell more goods to the United States than they buy from the United States. As a result, China holds extensive US dollar reserves. We all saw what happened when the United States confiscated Russian foreign exchange reserves at the onset of the Ukraine war. This acted as a trigger for many nations to reduce their holdings of US dollar and of US treasuries. China is pursuing this, but they still hold a huge amount of US debt. In the eyes of Bessent and Trump, this gives them power. However, we have seen some cracks start to show in Trump's economic strategy. Last month, we saw Trump state that tariff income will be used to bail out US farmers. Now, what has contributed to US farmers needing to be bailed out? Well, the lack of US farm products that China is importing this year, especially soybeans, is the reason why US farmers are struggling. China has instead chose to import soybeans from Brazil. This is one such area where China has leverage over the United States. The lack of imports from the United States into China is hurting US farmers, and this is just one such lever that China can pull. Another area where the United States is struggling is in critical minerals. Despite efforts to locate rare earth resources in the United States, and despite heavy investment into companies such as MP Materials, the United States is still far behind in refining capacity. They are also suffering from a germanium shortage. China restricted exports of this strategic material last year, and it is vital in the military realm. If such elements are vital to maintaining a strong military, and if China holds large control over these strategic materials, does China have leverage over the US military? This is one such area where the United States must mitigate its vulnerabilities. Final issue that I want to discuss here is the US bond market. After Scott Bessent's comments in April 2025, the MOVE index rose sharply. The MOVE index is often seen as the volatility index for bonds, since it measures implied volatility in US Treasury yields. As a proxy for confidence in US debt, its sharp rise signified clear warning signs from US investors. China could offload its US Treasuries, massively undermining dollar demand. This is already occurring, albeit at quite a slow pace. But from a market perspective, if confidence drops, yields rise and bond prices will fall. China, in this situation, would be incentivized to sell to avoid losses. This would further highlight the cycle that would see yields rising, bond prices falling, and confidence in US debt declining. Now, it's worth noting that this would hurt China also. By reinforcing this downward spiral, China would incur massive losses on the rest of its holdings of US Treasuries. Also, by selling Treasuries into dollars and then converting to Chinese yuan, dollar demand would fall, but the yuan would strengthen. This would make Chinese exports less competitive. Such moves would have massive global impacts, and they would see a tightening of global liquidity, and it would trigger instability in many emerging economies that heavily rely on the dollar. But, as I've stated before, China can play the long game, and they can let structural trends naturally develop. In playing the long game, China will slowly continue to distance itself from treasuries and the US dollar to reduce the dominance of the dollar over time. Now, with such advantages, I question if the United States can pressure China at all without resorting to extreme measures such as trade and financial conflict. As the United States attempts to reverse its decline by seeking leverage and resiliency, it will very quickly realise that it can't find much with the Chinese. Of course, there are some areas. The US has more advanced semiconductor technology, and the US footholds in the second island chain do give the United States some vision into China. The United States also has benefits in global energy, since it is self-sufficient on the back of the shale revolution. But generally, most advantages that the United States possesses could be weathered by China. The Chinese strategy of state-driven competition outpaces the system that the United States has benefited from, and in semiconductors, the Chinese could well adopt a similar strategy of state-driven competition to innovate quickly. China also had an issue of high local government debts, but they are recently providing support to solve this. This was a potential flashpoint domestically for China, and they aren't out of the woods yet, but they are aware of this issue, and they are working proactively to attempt to address its vulnerabilities. China can also weather the issues in the first and second island chains by continuing its current strategies of artificial islands and improving naval assets. Finally, when it comes to energy, China holds extensive stockpiles, especially of crude oil, and trade with the Middle East, Africa, and Latin America in alternative currencies, as well as continuing to utilize fossil fuels, will give them energy resiliency. So, to ask again, where can the United States realistically impose damage on China without also shooting itself in the foot? In the short term, strategies such as semiconductor bans, the weaponization of the US dollar and trade choke points could be implemented, but this is competing with China's long-term structural advantages of a strong manufacturing base, faster innovation, and the critical materials that are required to innovate. If the United States also pursued such strategies, this would see them as the aggressor, and they would thus lose some soft geopolitical power. If the United States was to implement these sharp aggressive strategies in attempts to gain leverage, they would be massively escalatory, and it would see the US-China relationship dramatically worsen overnight. To reiterate once again, the Chinese don't have to escalate because of these long-term advantages that they possess. This is a classic issue in ruling power versus rising power geopolitical clashes. Ruling powers, which in this situation is the United States, want to defend their position when their empires show indicators of decline. They typically have to make reactive, strong moves to defend their position. Rising powers can play the long game, they can respond proactively, and they can utilize long-term momentum. As a result of this, typically, aggression in these clashes comes from ruling powers who act defensively to preserve their dominance. Now, this doesn't always happen. The British declined to the United States without conflict, and Japan's rise wasn't patient. It acted aggressively as a rising power during World War II, but the general trends here in this ruling versus rising power situation are disadvantaging the United States and are benefiting the Chinese. The United States' pivot to South America could be attempting to understand that in the future of our world where globalisation is fading, we will enter a world of resilient regionalisation. The previous facilitators of open global trade do remain, but trade and trade partners will become a more logical choice. When globalisation gives way to regionalisation, for the United States, this means South America. For China, it means continuing to build an alternative global system and attracting those who feel unrepresented in the world today. In an episode I released a few weeks ago called The Future of Globalisation, I stated that the United States will have to pay attention to the Indo-Pacific, because if they don't, China's advantages will naturally see them soar past the United States without challenge. In the current situation that we find ourselves in, the United States has to put up a challenge, but it's the form that this challenge takes that is of interest. Next time, I'll expand this discussion and I'll cover the status of hybrid warfare today and what potential scenarios we could see unfold in the future in this superpower clash between the United States and China. That's all for today. If you enjoyed this episode, why not leave a review on the podcast platform of your choice? I've been Dylan, and I'll talk to you next time.